Markets erased all gains seen earlier in the week on Friday, with the frontline indices ending with cuts of 1 to 2%. BSE companies erased a market cap of 4 lakh crore rupees on Friday alone. And for the week, the Nifty, Sensex and the Nifty Bank slipped over 1% each. Hello and welcome to Taking Stock, the show where we review the week gone by and prepare you for the next trading week. I'm Sonia Shenoy, and joining me now is Mangalam Malu. Mangalam, hi.
Hi Sonia, what an eventful week it was, right? So let's recap that. Here's what we've lined up for you on the show today. We'll be joined by Nilesh Shah, the MD at Kotak Mahindra Asset Management, and Jay Bala, the CMT at cashthechaos.com. But that's not all. We also have market opinion that we got all through this week, right from Richard Harris, who's the Chief Executive Officer at Port Shelter Investment Management, and Sanjay Mukim, the strategist, Head of India Equity Research at JP Morgan. Samir Arora, the biggest of them all, we have. He's the founder and fund manager, of course, at Helios Capital. And in global opinion, we have Chris Wood, a big voice out there. But before all of that, you know, Sonia, what an eventful week it was, right? If someone told you that, okay, this week you'll have a slew of earnings, you'll have the inflation data from the US, you'll have the RBI policy, all of that. And in that, on Tuesday, the Nifty, from Tuesday's low of 1740, the Nifty rallied all the way up to 17,700, close to that level, 17,640 if you must. So it was a 600-point rally from the lows. And thereafter on Friday, everything was falling. It was just a roller coaster. What hurt most? It was the high PE, high-risk stocks that everyone was talking about. Yes, the Nifty during the week was down just 0.8%, but the mid-cap index was down 2/3%, as in 2.3%. The small-cap index was down 4.5%. So, you know, broader markets, there was a fair amount of pain. What are you watching out for next week? I'm looking at anything that comes by from the US Fed. Whatever they say, however they say it, whichever Fed chair says anything, everyone will be grabbing onto that, right?
Absolutely. And, you know, I think give and take everything, Mangalam, the market was down 1% this week, right? So not too much really happened in terms of the overall market movements. But I'm just watching out for a couple of things this week. In terms of individual stocks, blue chips lost a bit of ground this week. So whether it's TCS, L&T, HDFC, these are the stocks that fell about 2 to 4% this week. So in that sense, some money was definitely taken off the table, which is not such a bad thing, considering that we had so many big cues to watch out for, like this looming inflation threat on world markets. Apart from that, commodity stocks actually did well this week. So Tata Steel, Hindalco, JSW Steel were all up about 2 to 5% this week. But I think the biggest talking point for me, and something that you were covering, is the Adani-Wilmar IPO, right? I mean, the debutant came in and stole the limelight this week.
Stole the limelight, smashed it out of the park if you must. But, you know, you've given us a tease into the kind of stocks that have done well this time around. So let's take it straight to Agam, who will tell us what was moving and shaking around this week. Agam.
Well, a volatile week of trade, but among the gainers on the indices, well, we do have largely metals, minerals and banks. As you can see, Tata Steel, Coal India, Hindalco and IndusInd Bank advancing by around 3 to 7%. On the losing end, however, there has been a lot of weakness in the likes of HDFC Life along with SBI Life. So insurance companies taking the hit, and Tata Consumer and L&T among others, which are dropping. In terms of the broader markets too, we are seeing some good gains in GSW Energy, Adani Power, HCC and HT Media. But on the losing end, we have seen a substantial amount of weakness in likes of Orchid Pharma. Deepak Fertilizers, of course, looking at about a profit-taking, Morpin Labs and Birla Corp, among others, dropping by over 12 to 14%.
Okay, well, joining us on the show now is Nilesh Shah, the Managing Director at Kotak Mahindra Asset Management Company. And in a bit, we'll get another guest as well. Nilesh, thanks so much for being with us on the show. You know, as we were just discussing, it's a market that fell about 1% this week. Some money was taken off the table because of these inflation concerns looming. What do you do at a time like this when risky assets like equities have taken a bit of a backseat? Do you continue to buy into the dip, or do you take a bit of a cautious approach now?
So we will request investors to follow a disciplined asset allocation. This is certainly buy on dip market, but the dip will depend upon FII behavior. In March, April 20, they sold about 67,000 crore worth of equity, and markets corrected 40% from top. In last 4 months, October onwards, they have sold about 77,000 crore of equity, and market has barely corrected. So keep a watch on FPI behavior, as they will be influenced by what happens in US. And if their selling intensifies like March, April 20, then there could be sharper correction. If their selling remains calibrated like it is today, then the corrections will be shallow.
How big a risk do you think the inflation is now turning out to be? Because everyone has been talking about it, Nilesh, 7.5%. And there are, comments coming in from various authorities in the Fed itself, various Fed, spokespersons who are looking at interest rates much earlier than the scheduled meeting. Do you think that is likely to happen? And if that happens, what happens next?
So Fed is clearly caught on the wrong side here. Inflation is at decadal high. Interest rate is at centurial low. They are still pumping liquidity by expanding balance sheet. And they are kind of caught in between rock and the hard place. If they start raising interest rates, will that impact growth and recovery for which they have fought so hard? And if they don't raise interest rates, will they lose the credibility as inflation control? So what action Fed will take, a lot depends upon what role model Fed chooses. If it's Paul Walker kind of thing, then interest rates can rise significantly. If it is Alan Greenspan, then there will be a careful watch on the growth and the economy. And please remember that there is a midterm election coming this year. No government would like either high inflation or low growth. So Fed really has to make a tough choice. And what they do there will also have albeit temporary impact in emerging market. In emerging market, India has outperformed all the peers. Since March 20, we have delivered double the return compared to other emerging markets. If someone has to take profit out, he is bound to choose India where he has made a lot of money. So we will have temporary effect of what Fed does in US, but a lot will depend upon how FPI sell. Will they be calibrated? Then the impact will be far low. Will it be careless like March, April 20 without looking at any price? Then the impact will be higher.
Okay, I wanted your thoughts, Nilesh, particularly on the mid-cap IT space, because I just had a very interesting discussion with two analysts who told me that in the mid-cap IT space, there's so much opportunity right now because there's a massive migration that's happening to cloud at the moment. There's digital transformation, there's product engineering, and there is large-scale hiring that's happening. So, the supply side issues will also ease quite a bit. Most of these stocks are down about 15-20%. Is this a good time to be buying many of these names?
So, Sonia, a couple of months ago, we had mentioned that we are more bullish large cap IT than mid cap IT. And all the analysts have talked about growth is absolutely right. There is an incredible amount of growth happening in mid cap IT companies.